Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. Can I please get a screen and audio check in YouTube in the Bookmap Discord Trader Lab community? Thanks, Marty. Seabass. How we do it in YouTube. Well, all right, everybody. I'm not getting a response in YouTube. Can I get a check over there? Thanks, Nikos. Well, good morning, everybody. Welcome to Trader Lab. Trader Lab is a community of like-minded traders who come together to leverage their collective experience. This stream's based on structured trades that are available to everyone in the Bookmap Discord Trader Lab community, as well as a library of webinars. The stream's about integrating Bookmap order flow tools with auction market theory, using the volume profile as a chassis, and the community so you understand, is all about building out the business of trading. It takes a village or a community in order to leverage the collective experience of all the traders. Our senior trader has over 50 years of trading. I've got 45, and then we have a full range from really new developing traders all the way up to different time frames in the business. Time frame, right? Length of time has to do with the journey that you've taken. Many retail traders embark on an idea that it's the right mix of indicators and timeframes, and that's logical. However, this business is not logical. It is not really that relatable to the outside world or our typical experiences. This is a gaming business and is built or overlaid on top of gaming theory, which is the way casinos operate. They only play games that have a statistical edge. They don't control the outcome of any hand, what comes out of the deck, or how gamblers play, right? So they do pay the gamblers. On the other side of that, they also extract dollars from the gamblers because they only use structured games that have anchored inputs. The Trader Lab is based on the methodology of a proven business plan and model, and then overlaying instead of game structured trades that have a statistical edge. So we're using a business model that's already proven. What we're doing then is taking structured trades and vetting them and using the structured trades I've shared in the Trader Lab, plus the work of others, because we leverage to develop trade plans. And then it's a matter of execution, consistency, and understanding there is cost of production and overhead, which means losses. So the business of gaming is not a personal attachment to the outcome of any hand. In our business, we are emotionally attached. You can work with that issue if you come to Trader Lab and learn what the real world of trading is. And I would consider this and suggest that this is somewhat an advanced degree in trading. This is not what you're going to find out there in the ether, in the internet. And there isn't just the one thing you need to become successful. Let's get real. And if you're interested in real, come to Trader Lab. There is no cost. Now let's get going. I got a lot to cover here today. And as usual, I never have enough time. So if you're interested in what you see here, this is very much a abridged version, but you'll get the idea. General disclosure, all Bookmap Ltd. Materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Please grab a pen and a piece of paper. I'm going to rip through a couple of statistics. Remember, gaming, right? Statistical probabilities. That might give you an edge. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. And please remember, this is not a trade calling room. This is for educational purposes only. However, if we get there, we'll talk. So here's some statistics. Write these down. The probability of taking out either the ETH high or low is 93%. The probability of getting to, I got to show you these on Bookmap, if I can get all this stuff. Hold on. Got a lot of stuff to show you today. ETH high, yesterday's high. I'm sorry, current high. This is our current target for the long. neither here nor there, but I'll explain why. This is called the microcomposite volume point of control. It's a high volume. Remember, volume profile. In multiple time frames as you think of them, I don't, but let's just call it that. This is the highest volume in the consolidation that we're currently rotating in. So this is a high probability and targeted, so is this. ETH high is not a high probability target, but it is possible. There is to take out the first hour's high or low, there's a 97% probability. Well, we didn't take out the one on the bottom, so therefore, the one on the top. What do you think of that? Now, next, ETH mid. What is that statistic? 72% probability. Overnight volume point of control, let me find that one. Because we were on the short side in the morning. And of course that has changed, but that's okay. Overnight volume point of control, target for the shorts this morning, 82% probability. Now here's one that's real interesting. There's an 82%, hold on, let me just check something. Okay, 82% probability we take out either the previous high or low. And that's going to play into what we're talking about today. And it does make things interesting. Previous high, previous low. So our targeting is low, shorts first, going for this, 95, and this with an 82-ish% probability, whatever it is. Past performance not indicative of future results. And there's many more statistics, but this will just kind of give you a sense of smell. Because statistics, it's a kind of the way to aim the boat, if you will, and not just trade in the dark, but have probabilities. So if you got short and you have an 82% probability of getting here, what do you think? And you have over a 90% probability of getting to the ETH low. And of course, we don't know which one we're going to go, nobody knows, high first, low first. But then we have structured trades. This is Trader Lab. Now, I got to get back to the RTH open because you know what I like to do here. It doesn't do you much good to be in a trade calling room. If you've done that, how's that worked out for you? I'm going to suggest it's a waste of your time. Now, that's just a personal opinion. How can you learn the trade? Why don't you just turn your dollars over to a money manager and let them trade it because that's what you're doing, and you're getting to push a button. Is that trading? Is that sustainable? No, it's not. Sorry if I sound insensitive. I am, because you only have a couple of things in this business, your equity and your time. And you don't want to run out of equity, and nobody, or most of us, don't have unlimited time. So don't waste your time and don't throw your dollars away if you want to create a potential career in trading. If you're just interested in the dopamine and, all that, playing a video game, then you should do whatever works for you, or just go to a casino and then get the cocktails and the ticket to the buffet. That's just my opinion. And if I sound a little insensitive, it's because everybody else, or not everybody, but most other traders have walked in your shoes, and we all have. The difference is, are you going to keep walking on a path that doesn't bring you the true opportunity of what this business can realize for you? I have another thing to show you. It was a short, if I can find it. This is the CPI report. Now, this is a structured trade in Trader Lab, and I'm going to show it to you. And it's all structure. Now, 25, I showed you that level, is a microcomposite volume point of control. Now, this is the ETH, and it's 7:30 my time. Sorry, I don't have the time scale in here. I just grabbed this for Trader Lab. So this is the highest volume in the microcomposite or high volume area. Here's your ETH high, which is still open, as you know. So off the report, we made the ETH high, which is up here. This liquidity was sitting right here. We blow through the liquidity. We see buy stops coming off, and we have a stop sweep. This puts the antenna up right here. Now, the absorption was right here, and there's icebergs we're taking the other side. Now, here's an interesting thing. This is a structured trade. So I'm again at my location up here. Let's think about this. Trading is like real estate. Location, location, location. Watch. So we break here. This is support in the way, and this is a structured trade. So we break the liquidity and we break the micro-composite volume point of control. Volume point of control is high volume. High volume is like retail. Trading is shopping. So just so you know, no magic. It's simple. The problem is, for us, it's random. So we're continually in an uncertain environment, and the rotations are random. The whole darn thing is random. So we are triggered emotionally because of our fear, because of uncertainty. If you can't be certain, you're always going to be in a state of fear. The other side of this is the casinos are in the same condition, but they're not attached personally or emotionally to the outcome of any individual hand. We are. And there's solutions for that. So shopping, simple, random. So this is a structured trade. Location, location, location. Come above, support. Break below, trigger. Now I need a micro trigger for entry. This is all in Trader Lab, and this is what it looks like. You break below. Now you have a trigger in this. You're aligned with that micro composite volume point of control, which is right here. You break under it. Here's alignment and confluence. This is a structured trigger. Chop, chop, micro consolidation, micro high volume node there. This high volume in this little structure is the same as this big volume in the micro composite structure. High volume. High volume. It's all the same. This is your short entry. Your stop would be here or here. This is a consolidation. You see where we come back and check the outside edge. So this is your trigger. Your entry would be here or here on the test, and then you're out here and off you go. And target number 1 was the naked volume point of control. And target number 2 was the low volume node. We got here actually. And then the next target was this, which we did not achieve. And then we rotated and the trade was over. I wanted to show you that. This is Trader Lab. Now, and how would you do this? Here's how you would do this. You know, if you're in Trader Lab, auction mechanics, pricing, shopping, you know this is an important level. You know if we break under it, it's important. You also know 25, which is the current high of the day in the RTH, is the same level. Is that interesting to you? This is Trader Lab. Now there's more. I have an important announcement, by the way. There's going to be a funded trader webinar series, and this is next week. Now, that's November 18th to 22nd, and that's 2024 in case you're watching this, in the future. So be aware of that. Make a note. It's going to be 9 a.m. Central Time and in the special events area, and it's going to be going on all week. You're not going to want to miss this if you're interested in funded trader programs. Now, let me see if I can get more going for you here. Okay, now, I think this is Tuesday, Wednesday, Thursday, Friday. Okay, I'm taking you back to the higher time frame. Remember, I'm talking about the micro-composite volume point of control. This is it. It represents all the volume in a consolidation. So right here, they overlap, so that's a consolidation. If you remember, if you're in the lab and you're following this stream, we had shorts on this day, and our target was this, 60.14, and it was the low of the day. Now, the fact it's the low of the day has nothing to do with predicting. It has to do with the auction. The way the auction works, very simply, is if this is the retail price for all of this, in other words, the highest volume, and I come outside as a shopper, and now there's less volume here, that means there was demand. So this level, because there's a notch there, is called low volume. If we come outside, it sets up something called potentially, and that's the word, potentially, mean reversion. This is the mean or the mode. And if I come outside and this is still too low, I'm going to rotate back. So the longs, so the way it worked was shorts to here, and then you don't know. But once you see it, then longs back to there, and then wherever. Okay? Now let's remember this price, 60.35.50, and let's remember 60.25. Write those down. Let's remember 60.14, this low. Let's remember 60.07, and let's remember 59.94.95. Write those down. Very important. 35.50, 25.25, 60.14, which was too low. Remember, we got our buying. You'll see 60.07, high volume node, which means if we take this out, this is the next high volume or retail area in here. But there's stops under here. Don't forget, market is long. Stops are here. And of course, we have a gap, neither here nor there. And then what's next? This. Now, let's go to the next day. I hope you're getting something out of this. This is Trader Lab. This is the auction. Now, where are we? The 35.50. What is this? It's the highest volume price in this specific RTH day. In the consolidation, this is the highest price. This is called fractal trading. So yesterday we opened. What do we test? 35.50. What does that give us? A short to where? To 25. To where? To the low volume node, which was right under here. I covered it up. We take it out. Why? Sell stops. What's under here? Sell stops. Where was our next scale? 07. Where was our next target? 95. And then if we get lower, we've got this, the gap, and and then this. I'm just saying. But if that makes sense, guys. And I can't see your responses, but I hope you're seeing it. Are you guys with us? Now, you got the stats and you see the higher time frame. This is yesterday. This. So we got our targets and it went a little beyond, and then it came back above. When it came back above here, it set up a long. Where to? Back to here and back to there. I think. I don't remember how high it got, but or 15. I don't remember because this started out here, but it set up a long. And I also, that's all in yesterday's stream, and that's posted. So now we have 60, 15, 50, and 60, 25. So let's watch, track, and follow. This is the yellow brick road, and this is trading in fractals. Let me just see if I can. Remember, the 25 is here. That's the reason for the short in the ETH. And the 15.5 I just showed you was a target coming down. And so I'm going to go now. Let me try to get back. Yeah, here we go. Okay. Now, what are those levels? 25. Where's the high of the day? 25. Let's look at the trades now from today. These are structured trades. They're available to all of you in the Bookmap Discord Trader Lab community. Just want you to know. Also, there's something else I want to point out to you. I always like to talk about this. There's a link in the bottom of YouTube. There is no cost to access the Bookmap Discord Trader Lab community as well as other education that Bookmap provides, all at no cost. In addition, do you have a pre-market plan? I have a series of webinars, and some of them are out there public, and a lot of them are private. All of these. Dissecting market structure. Deep dive in volume profile. See the magic. VPOC migration. Creating a trading edge part 2. It's a 3-part series. I'm just saying, if you're not taking advantage of all this, you're missing out. And that's all available. You come to Bookmap Discord Trader Lab community. There's links in the library, and there's a lot of other material that's not out there. It's specifically for Bookmap Discord Trader Lab participants. Now, trying to move right along. Okay, opening trade. Now, you do remember where the 15 came from. You do remember that this is our target and we're under it. So when we're under it from the ETH, and the short in the ETH, remember, was under here to here and down lower, neither here nor there. And the target was the overnight volume point of control for the short in the ETH. What happens if we're still under here in the ETH on the open? Shorts, where to? 82%-ish probability to get here, and about a 81% probability to get to yesterday's low. So, all things considered, going south of the border. By the way, I got to look and see, do you have questions? Whoops, sorry, guys. Please give a thumb up if you're visiting in YouTube, by the way. Helps. Now, one more thing. Sorry, gotta do this. This is the Trader Lab community. I just want you guys to know, if you're visiting in YouTube, there's a 24-hour, 7-day global community of traders with all levels of experience, and everything is going on in here. This is all day, all night. It's just going. We have them, and there's a lot of interaction here, a lot of mutual support, trades posted, discussions, narration of today's context, and you're all welcome to visit the Trader Lab. You can all access this. I post in here, of course. I discuss trades. There's just a lot going here. I won't spend any more time here. I remind traders of what it takes to succeed in this business. Statistics, these are available to you. You hear me do these stats. Now I'm going to get back to the open. Let me see what else is posted in here. All kinds of stuff. I have to kind of move along here, so I'm going to jump to the present on this and get back to our narrative. Okay. So, RTH open. So I'm looking for shorts. Now, of course, the joy in trading is, where do you get short? Right. Wouldn't you like to know? Me too. So now I'm going to go into microstructure. Now, some of what I'm going to discuss here is more advanced, and it's only advanced based on experience and the ability. I don't use indicators, and most of us use indicators because really it's a translator. It's kind of telling us what's going on, right? Well, that's nice, except how do you know what's going on? What does your indicator tell you here? Does it tell you to get long? Does it tell you to get short? Do you know where you are relative to the condition of the market and the auction, which is the truth of the market? The market is based on a shopping experience. What's too high? What's too low? What's fair? This yellow line represents the retail price. Now, we're going shopping together. Let's go down the aisle together. Let's go to the supermarket. This is the price where most of the volume is taking place. Now, RTH open, 8:30 Central Time, my time. So this is where the shoppers, and this is too high, this is too low. So it's an auction. This is what an auction is. If it gets on sale, and we have a seller here, you see the red bubble? What is that? That's delta. What's delta? Aggressor. But what's on the other side of the aggressor? Now, aggressors are market orders. Market orders come initiators and sell stops. There's the stop. So there's stops and there's shorts right here. Now, I'm looking at this and I'm going, yeah, thinking maybe a short. I have no buyers up here, just buy stops, and no, you don't see the bubbles, right? So I have the bubble here. I got my sellers here. I have buyers there. Why do I have buyers? Because the market went up. Who is buying right here? The passive side. Can't see them, but that's what your limit order book is all about. They're passive. Limit orders are passive buyers. I'll wait for you. You give me the price, I'll buy it. Otherwise, I'm not buying it unless it's on sale. Up here, you have the passive sellers. So we're bracketed, and that's what creates a consolidation. Inside, so in the shopping world, I'm not paying that. Oh, but it's on sale because that's the retail price. You like the shop? It goes on sale, you throw 2 in the cart. Back to retail. The price gets too high, the buyers go, I'm not paying that. And down we come. And so that creates our rotation. This is interesting because right here I have my aggressors, but I got an iceberg. What was over here? An iceberg, passive limit orders. Iceberg, passive limit orders. Now I'm just focusing on order flow to kind of get you aligned with me. Now I come up here. What happens up here? Aggressor, aggressor, aggressor. Take this out. So this is the opening swing we're working in here. I take it out. There's my stops, 39. And what happens here? I see a seller. So I get my buyers here, and I see an aggressor on the other side, and passive sellers are up here. I get a buyer here. Why doesn't it go up? Limit order, absorbed. Think Pac-Man. Buyers, but these guys are absorbing the buyer. What happened down here? Sellers. Why aren't we going down? Buyers are absorbing the sellers. So this is kind of what's going on in here. So what I know is this is our retail price from yesterday. Our settlements below us, I opened higher inside of the range, and I can go anywhere right here. And I'm looking for a short. Let's see, because I'm below the 25. But I also know I can get squeezed out, of course. So I'm looking for the short. Let's look for the short. Right here, I take a short. Watch. So what do I know? Too high, I see the buyer here. I see the seller here. I break here. My buyers are trapped right here. I come back up and test. For all I know, going to the moon. What happens here? Passive sellers, no buyer. Seller is here, below the buyer here. I know it's going to make it crazy. You got to learn this. Not saying you have to, but I'm saying is this is what we do in Trader Lab, and this is part of the education that Bookmap offers on order flow. This is a high-tier tool, and like every specialty tool, especially one that's like this, it's not plug and play. It is learn to read the music. I don't use indicators. I am the indicator. Why? Because I've learned the language of the market, and you can also. This is speaking a language, and the behavior of the order flow is the language. So if I can read order flow, and it doesn't mean I don't take stops, and I mean that happens to all of us. Casinos pay to gamblers, overhead and cost of production. So stops are part of our business. Cost of production. If I know what this means, because I speak the language and I know the passive side is here, and I see the icebergs here, and they're larger, more icebergs than was over here. Look at all the pieces I have in order flow. And now I come back here. What's going on here? I didn't take them out, and I didn't get above these guys who are under the bus. Break low, pull back here. Nothing going on here. Short, watch. And by the way, short, I take a short right here. I'm looking for full session VWAP. I posted this in Trader Lab. So let's watch it. Where do I come? Here. Now my stop is not here. It is outside. And I was thinking of bailing out here. I really got perturbed, And I went, boy, you really messed that one up. You ever talk to yourself? So what this told me was two-sided trade. As soon as we come back above here, there's trouble. So right here, I'm looking at it and I'm saying, okay, are my sellers going to come back in from here? Now, this is not necessary. I mean, you could bail out of this trade too as soon as it crosses over. No problem. No, it's not a problem. So I come up here. I don't get taken out. These buyers get trapped. And now I have this. I rotate again. I'm saying, okay, maybe I'm going to be all right. I come back again. Teeth are chattering. I break below. And I'm saying, okay, but my buyers are here. So I have to get below this. I get taken out. Not happy. I come up here. And I didn't scale, so I took a stop. All right. Am I going to be depressed over it? No, I'm too busy looking for my next trade. I'm thinking to myself, I'm okay with this trade, but we instead of going to my target, what happened was we went into rotation. So now I know it's called an open auction. So I now know that it can do anything now. It can rotate up. It just took the early shorts out, and now I might have buyers here. So I'm still looking for the short. Watch. Buyers here. This is support now. Come up here, no buyers, micro high volume structure. Looking for the shorts. Let's just see what happens. Break again. And I'm going, oh, come on. You ever talk to the market? So high volume is here. High volume is here. I break away. Now this is my support. And I'm going to put a little line because this was too low. And I got my buyers were here. These guys were absorbed. So let's watch. Break. There's support. Pull back. And right here, I put the short back on. I didn't put it on here. And I was itching to, but because of this. So when I pulled back here and I saw my buyers, why? There was absorption here and my buyers were here. I pull back and I see, what do I see here? Let's look. Nothing here, micro high volume structure. Let me show it to you. I'm going down in fractal or time frame. Support, resistance. There it is. Outside edge is here. Low volume area. Retail, VWAP, mid, resistance. I got my short here. My stop is here. And I'm going for, actually, I was going for the overnight mid in full session VWAP. Okay, so I'm not scaled yet. Where's my resistance? Let's see. And I get taken out again. So I'm, I'm having a rough time with it. I really am, So, and I didn't get my scale. All right. So support, resistance. So I was okay here, but then we took it out. So support, take it out up here. So I'm still working the shorts. So that's 2 for me. And I'm going, 1 more. And then I'm done with that idea. Come out here. So it's still 2-sided trade. So I know I'm in an auction. And yet 25 is really my outside. And I'm below it. That's why I want to be selling. And I have stats. I have my overnight high and I have my overnight low. The overnight high was made on a report. And I had a short, remember, from 25. So what I'm trying to do is find a location under this for this to take the other side and my 82% probability. So I'm getting battered around. Just saying. Not a big deal. Annoying, but not a big deal. So here's my high volume structure. Here's my micro high volume right here. And I'm looking for the short. This now is called mean reversion. When I come outside, the context, of course, is 2-sided. So I'm out here. Now I'm showing you I'm taking some stops. Okay? It's not a big deal other than how you, quote, feel about it. So what happens here? This is the mean. So mean reversion is outside in trading. So now when I come across again, I'm going, all right, I've got to wait for an outside edge to come back here. And as long as I'm under 25, I'm still working the shorts. I see buyers here and exhaustion. So that means the passive side is here. I have high volume right there. Let me show you what it looks like at the time. So right here, chop, chop, break. So this is a potential triggering structure. I don't know where the high of anything is. Not blessed with that yet. Still working on it, and maybe not. And I get absorption here. So I had sellers here, and I got my icebergs now showing up here, and I got stops. So, and here's my high volume. So right here is a retail price, and it's like going down the street to your local store. Absorption is here. Now, I don't know. Watch. Break. right here. This was resistance, remember? Break, resistance, support, too low, support. This is when the shorts were in trouble. Resistance now is going to be in here, break, back to the mean, break, pull back to this, trigger, pull back, short, back on the shorts. And it's like, come on. You ever talk to the market? Now what? Remember 60.07, right? I showed you that at the top of the stream. What's going on at 60.07? There's liquidity right there and absorption, big absorption. 500 lot iceberg goes off. This. And what is this level? Where did that come from? If I can find it again. Maybe I can, maybe I can't. I think I can't. You know, I showed them at the top of the stream. If you review the stream, you'll see them. So this is on that chart I showed you at the top of the stream. So, and I have this. So right here is another scale for me. And then I'm going for 82% probability, the overnight volume point of control. I don't mind showing you all this because, yeah, this is what happens. Now there's more. I got to label this, by the way. This is called the variable high volume node. And I did a webinar on something called VPOC migration. Today has some of it, but there's other days where it's very useful. And it's, again, an advanced process. So you understand what this all represents. So we pull back. And what do you see we pull back to? Right there. You know the concept. Support becomes resistance. Another short or an add right here. So right here, scale, pull back to here, add, short, VPOC migration. Now here's the situation. We got to get below this, and the possibility is this. Break, test, check, lower, or break, test, break high, and come across and squeeze. And that's trading, right? 82% probability to go here. Next target. Now watch. And I'm sorry, there is another target. ETH low. Right here. Target was here. And what else is there? 95. If you are late to the stream, grab the link, because this is not going to be public. This is going to be only for Trader Lab participants. But I think if you save the link, you might be able to watch it again. But don't hold me to that. So this is our next target. And this has what was the statistical probability? Over 93% probability we take out the ETH higher low. Now there's one more. So this is the next target. Now I've got one runner left. And yeah, I got a little abused. But guess what? I'm way ahead now. So that's trading. And yesterday's low, remember, yesterday's higher low, which statistic is still open, has an 81%-ish probability of getting taken out. Well, what does that mean? Well, we didn't take out yesterday's low. Is it possible we will take out yesterday's high? Isn't that an interesting question? So right here, we come down here, no clue. Of course. And what do? Look at the buying. So the buyers came for it here. 1,200, well, let me just show you this. 1,200 sell stops coming out. Thanks for playing. This is when your broker sends you a gift basket. Stop sweeps. You got everything here, but the kitchen sink saying heads up. Now, nobody knows when this is going on that this is going to be the low of the day. At least I don't. So since I can't predict anything, and neither then the casinos, here's what I do. I'm going to show you trade management now. I hope I'm not covering too much stuff here that you find boring. Trade management. They're high volume structures. I'm just showing you a way to read the auction. Actually, this one's a little bit off. It should be there. High volume structure. You can see it if you look to the chart volume profile of this. So all I'm doing is looking at these structures, and I don't have to put lines here, but I'm doing it so you can see it. So as the market is coming down, and you can see there's one here, and these are consolidations. If I break below a consolidation and I test the volume in it, and think of this like mean reversion in a microstructure. This is too high, and I break away from it. Now I pull back and I chop, 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 chop. What is that? Same thing I was showing you at the top of the stream. Too high, too low. Break away. Too expensive. Chop, chop, chop here. What happens here? Break away. Too high. Microstructure. Pull back. This is the resistance is up here. Break low. Going to zero. What happens over here? And there's no way to know until hindsight. So don't think anybody knows anything. If this right here, chop, 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 instead of going down, I break high. Notice there's a bit of difference in behavior now. I broke high. Warning, Will Robinson moment. Let's look a little closer. Now, what do I have here? A seller right here against our resistance. And the resistance is these little micro high volume nodes. Remember the shopping experience. This is just a little store. That's all it is. But the behavior's the same. Oh, it's on sale. I'm not paying that. And then we leave it. So this retail price is too high. Down here, micro high volume. It's right there. It's in alignment with my ETH low. Who knew? I don't. Break high. Too low. Now, what's too high? Here, resistance. See the reaction? What happens when I come down here? Too low. Then what happens? Break high, break above here. Short is over for me, for the runner, which was going for that. Okay? Now look at the change in behavior. So when this happens, everything changes. We're over ETH low. We tested it. We're over 95. We're over the, whatever it was, where that liquidity was, 07, I think it was, which is a key location. We did not do this. So there's a narration that we do in TraderLab. It's called if this, then that. If not, then what? It's a conditional narration. So what I share in the TraderLab is how do you stay in alignment with the market? How do you know change? Now, we don't know change until hindsight, right? We don't. You're not going to know. I don't know. But what I do know is if I'm narrating the auction is in real time and I'm watching the thing and, and I got a target and I'm already counting those dollars, right? Oh, we're going to do great. Right here is change. So right here, I'm looking because I know where the other level was, and I know this is resistance. So since I'm monitoring the auction, which is what this is all about, too high, too low, retail, I'm not paying, too high, too low, retail, forget about it. Too high, too low, too high, too low, retail, leave it, too low. Now your choice in your trade plan is what is the time frame or fractal you're trading? Some traders are in a really high time frame and they'll ride through something like this. I don't when I'm at locations that have statistical probabilities and something doesn't happen. If I have over an 80% probability of getting here and I don't do it, what does that tell me? Look at the other side. That's what it tells me. So then no more shorts for me. Now, and what is this called? There's a name for this called mean reversion. Come back here. So I don't trade in the middle, and I posted in TraderLab, do not trade in the middle. Now, that doesn't mean you can't trade in the middle because the market can do anything. We can come back to retail. This is on sale in a higher time frame or fractal. It's too low. Well, where's the retail price for the whole day so far? It's right there. So if this is where the sale is, and this is the retail price, and the shoppers for S&Ps throw 5 in the cart instead of just 1, where are we going to go? Notice the velocity of this move. It's a change, isn't it? It isn't just a little rotation and continuation. We blow past levels. That's why no more shorts, and this is the mean. So if I was long, which I was not, this is where I'm going. This would be my target. Just saying. Now let's look at the change in behavior. See if you can see anything here now. Now we come out, and now the possibility is the following. This is a low volume node. What is that? You remember I showed you in the higher time frame charts that there's something called low volume nodes. And what they are same thing I'm showing you in these microstructures. Too high, too low, too high, too low, retail. Well, what's this? If this is retail in the developing daily time frame, retail, so what's too high, too low? Low, too high. I'm now moving up in time frame, as you think of them. Too low, too high. Now this is a bit messy, right? Because I got high volume here, this one, I got the big high volume there, and then I've got stops above the opening swing high. So for me, if you're going long, you got to go for the opening swing high or the IB high. Remember, we have over 90% probability of taking either the first hour's high or low out. So this turns the barge around. So the only way I can trade this is what's called outside-in trading. This is called mean reversion. Okay? And at 9:30, that IB is set. It's the first hour's high or low. Well, we know this is the first hour's low, and we rejected yesterday's low. So it's time to turn the tanker around and only take longs. So in the Trader Lab, now when I say only take longs, you could be taking shorts, you could do whatever you want to do. If you have, you could do whatever you want to do. However, in Trader Lab, it's about statistical edge. Now you might, in your time frame, be able to sell this and get a little rotation. I find for me that I take stops, right? You take stops, so that's just overhead. You're not going to ever find a way not to pay cost of production in any business. So we have to get over it. We really do, to be in a business that has a random outcome. So if I take this short, I'm taking the similar risk as if I took a long that has a statistical probability with over 90% to come out the first hour's high and take out yesterday's high, 80% probability. See what I'm saying? So why would I get short? My edge is to the upside now, statistically. But how do I trade this? Now, this changes context from down to up. Now, what are my structured trades? Let's look. In the ETH, this was the retail price. It was a target coming down. That was a target, this area, targets coming down, and yesterday's low. Rejected yesterday's low. I've now come across this, and I'm heading to the north side. If I hit this, and I get my VWAP mechanical sellers, God bless them, we need them. Why? Because there's stops going to be piled up here. So when I'm thinking about trading, I'm also thinking, where's the stops? Those are fuel. These shorts, the mechanical VWAP traders, and that's all fine. You're a VWAP trader and you have an edge, knock yourself out. That's all fine. In this process, we are using typical retail trader behavior because they're very predictable because they all do the same thing. And here's the other part. We've all done the same thing. Oh, it's coming to VWAP. I'm going to sell it. Yeah, okay. Well, in the auction, not necessarily, because we already know statistically, remember, put the pieces together, that we have an issue and the market is short. If the market is short, do you want to get short or do you want to get long? Me, long. And the statistics support it. How do I get long? And I posted this in Trader Lab. I did not get long down here. I'm waiting for a couple different possibilities. One is if we come out the IB and I don't get over 25, potentially I'm going to be taking a short. That was one to come back here. It's called mean reversion from the other side. If I want to get long, I've got to get outside somewhere for it to come back in. And this is a hard trade because we don't know where the outside is. Part of the thrill of randomness. And this is my least favorite context to trade because I can take more stops in this. And the other part of it is, like, for example, you come out here and you see absorption here. I see icebergs, I see sell stops, and I know I've got demand. Where is the outside edge? Well, I got my high volume here. Break low, break high. This could be a long, and I would take a stop. I'm just telling you. Come out here. This is my outside edge, so I want to be out here. The closer I can get out here, this creates outside in. Oh, it's on sale, boom. So I take more stops in mean reversion, but I'm also pretty good at risk management because I'm very patient. So this long is the entry is here in this volume, right? Let me show you. So you have to be disciplined, you know. So right here, you see where the volume is. I'm going to put a little line. I got too many lines going here, but just bear with, please, because I'll get rid of them. In fact, I'm going to get rid of all of them. Actually, I'd like to keep this. I want to isolate this for you. So this is a long right here. And you can see the volume. It's in this structure. This is the mean. Mean reversion is outside in. So I'm trying to find the outside. This is the outside of this whole thing, and it's down here, the low, it's called a low volume node. And that's like this urgency creates low volume. In other words, we didn't do the chapateria. And by the way, I'm just going to label this one too, because this was our last consolidation and we broke away from it. So the high volume is here. Now, I don't know if we're ever coming back there. It doesn't matter. So this is the next high volume. So this is my trigger, my structure. If I break high, then this becomes support. And that's my entry. That's my entry. My stop is under here. Doesn't work. I get taken out. I come out here. I'm closer to my outside edge. And you know I dislike this with a passion, but it's not, it's just the way it is. What is this? Micro high volume, break high. So it's a suspect. I come back here. I'm getting mid sellers. We got our VWAP sellers, and they're all having a great time. I'm looking for a long. Micro high volume structure. Break high, trigger, same as this. Pull back, exhaustion. These guys were absorbed. That's what happened over here. There was absorption, but it just... And here's another concept for you. If the buyers were here, absorption, break high, are these buyers going to go, oh, really? I can put some more in the shopping cart? They come back for it. So you got to think a little bit like that. Just because this is here, this low, doesn't mean we won't take it out. And if we do take it out and it gets your stop, and I typically leave my stops like 3 ticks under or under one of these, but that's more than my risk, okay? So I take a stop and I come here, I'm putting the trade on again. It's the same trade from a different location. This is my outside edge. This is my support because I ran away from it. So I'm trying to, and this is my target. See, now where? Next target, 25. Or any of these. You could be taking this. You could be taking this. Variable high volume node. It was too high. This is also a viable target. Watch. Watch. Target is here. I'm going to put a line. Forgot about this one. What is this? It's the same as these, except it's a fractal. So microstructure, higher time frame, mean reversion, target. So this is another scale. This is all in TraderLab. This is TraderLab methodology. Notice what happens here. That's why you scale. Now, the following is possible. Come back down, take this out. Stop stays here, or you have another trade management process. This is a scale. So the long is there to there to there, and 1 for 25 or higher. Why? Statistics. What is this? Resistance becomes support. You guys know that. Where are we going? 25, next target. Trade's flat for me. Okay? Now there's more. VPOC migration. Too low. I'm going to look at your questions in a moment. Thanks for your patience. I just think it's kind of important that you see something that's advanced, and I believe anybody can learn if you do the work. You will be frustrated because of the randomness. This is resistance. Watch the behavior. This behavior you see here is the same behavior you see there and the same behavior you see against these. They're fractals. Think Russian dolls. They're inside each other. So the thing, when you think of the word time frame, I kind of think like that, but I'm not thinking about it the way you guys do. There's no rigidity. In other words, oh, I got to have 5-minute candle or something. No, at least in order flow. Order flow is based on how long did it take for this to happen right here? How long did this take? And when I broke high and this became support. And right here, I have microstructure. These guys are being absorbed. The absorption is here. The absorption is there. The absorption is there. The absorption is there. Order flow. Break high. This is support. Where's resistance? There. It's all the same. And what do I see up here? Absorption. So I get my buyers going to the moon, except there's a target. If you're in Trader Lab, that would be your trade. And then VPOC migration. Now this is resistance, right? There. Let me show you. Don't forget, target, right there. Micro high volume structure. Let's look at this one together. Target. Now I don't put my limit order here. I put it a little up in front because, and you see why. Now let's watch. Where's our support? Isn't it here? Come on, there you go. Statistic, don't forget, we have this, and then we have over an 80% probability to take out either yesterday's high or low. Where do you think we're going, guys? Not a recommendation. I should be pretty current now. I don't know. I haven't seen any of this. Yeah, okay. Any questions? And again, thank you for your patience. How are we doing in YouTube? Please give a thumb up if you're finding this useful. This is the Trader Lab. This is what we do. It's a community of traders that have come together. Doesn't matter what your methodology is, bring it. Everybody comes together. It's a leveraged community. The goal of the Trader Lab is to build trade plans so you are operating like a business. You're not a gambler. Now you can gamble if you want, but that's not the purpose of Trader Lab. The idea of Trader Lab is to help traders build careers. This is advanced. This is if you haven't been exposed to this or understand market mechanics and the auction, then you've been on indicators, and all an indicator is, and I'm not against them, is a translator. The challenge for us with indicators is that they all work at times, just like gamblers also win at times, right? Well, everybody. If you just flipped the coin and went buy or sell, you'd win at times. So what we tend to do, since if we don't understand how the market works, we're defining the market by our indicators. In other words, it's a proxy for actually understanding what's going on here. So we depend on that, and then we select time frames. So we can have conflict and ambiguity at all times in a random environment. Those inputs aren't anchored. They're all variable. So you have no way to determine if you have an edge. What you will see is winners and losers. And we all do. The difference is you can't measure to determine, do you have an edge with any process, or is it just all random? And that's the fallacy of using indicators, because they're not anchored. Casinos don't play games with variable inputs. They don't make up blackjack and change it. They don't do any of that. They just have anchored inputs. Play it the same way. Every hand's exactly the same. That's because they're playing vetted games that have statistical edge. And they have to play them the same way to extract the edge from the gamblers. That's our business. So when you're using indicators, you're trying to use a substitute for actually understanding how the market works. The other part of that is, if you understood how the market worked and you understood market mechanics and why traders get trapped on the wrong side and just what most retail traders do, you wouldn't do it. You would only interact when you have a statistical edge. If you know you have an edge and it's documented, researched, quantified, you would know what your probability is of getting risk neutral before taking a stop. That means a minimum two-lot configuration. You would know that over time, you have X% probability of getting to your targets. You would know, using a specific trade management process that you have vetted, support, that you would have an edge with that. Now, here's what edge does for you. First of all, it eliminates, as much as possible, impulse, FOMO, and all the other things that plague us as emotional beings. When you have statistics, you open your trade plan to the specific trade. You already know where it's going to show up. If it does, you anticipate it. Mentally, you're ready for it. Then when it shows up and you have a triggering structure and all the pieces come together, you put the trade on, because now you have the courage to manage your fear, which we all have because of our wiring. Is there a saber-toothed tiger behind the rock? I'm going the other way. Fear. And you have a tangible statistic versus an emotional response. Let me go back to indicators for one moment. Problem with indicators, besides the things you already know, is, and I did a webinar on this called Trader Groundhog Day. The problem is they work at times, and we think it's just making it better. Tuning, tweaking, boom, boom, boom. And I always like to just go back to the thing. I built trading systems thinking that it was just a matter of taking the math and optimizing it. The term optimization, right, is curve fitting. So I did that for a number of years when I was managing dollars. And like everything, it would work and then it would break down, and it would start breaking down. I'd have to take a data set and re-optimize and do walk forward testing. When you guys are tweaking and tuning your indicators, it's Trader Groundhog Day. You're going to spend the rest of your life doing that, because you can't optimize an environment that's unique in every moment and random also. And you can't manage your emotions because we're in a completely uncertain environment every moment. So if you don't have statistics, you're subject to the chemicals that are released in your brain, and that will overwhelm everything. Your intention, your consciousness, hey, I'm not going to bail out. And then what happens? If you were long and you have a position for yesterday's high or not, you could be out right here. I mean, it doesn't matter, right? What's your plan? Or you have a runner and you're looking for yesterday's high because of the statistics. And we can counter rotate, take out the long. Anything can happen, right? Uncertain. But if you have a plan for it and you have a statistical probability of over 80% to take out either yesterday's high or low, you might then be managing the long and also confident that the probability, maybe not this time, but over time, will keep you working the longs, unless you're a short-term trader, and then you could be working the shorts back here. There's something for everybody in trading, but what there should be, in my opinion, is probabilities that favor you, the person who's taking the risk, and you don't trade in between. You can develop more trades. You come to Trader Lab. Remember, all those structured trades I'm talking about right here, and the probabilities and the library of webinars, it's available to all of you at no cost. So I don't know why you would bang your head against the wall if you're not getting the results you want. And it's not that Trader Lab will be your solution, because nobody can hand it to you. There has to be psychological alignment. The psychological alignment comes from vetting trades and developing confidence, not in the next trade, but in the sequence of outcomes in a random distribution of trades. Because how do we know which trade's going to work or isn't? The answer to that is we don't. How about the long that I was talking about, which I forgot where it was? The first one I put on, for mean reversion, took a stop. Put the next one on, and here it is. How do you differentiate? I'm sure the casinos, if they could differentiate between the winning hands for them and the losing ones, they'd skip the losing ones. But they accept they have overhead in every business. They do too. So do we. This is support. Resistance. Microstructure. Here. So this is too high. This is support. Let's watch. Statistic open. Questions? I'll check them now. Thanks for your patience. IBF, IBC. For me, neutral stats say IBF first. If coming back up high, then IBC going. Well, I hope I answered your question there. The question was, there's two structured trades in the Trader Lab. One's called the IBF, which means it comes back in here and it mean reverts. Well, that's the IB failure, and it's a mean reversion trade. The other one is something called the IB continuation trade, which is when you break out of the first hour first hour's high, then it's either a potential short once it takes the IB, but there's no qualified short, or it's a potential long for continuation to there. So IB continuation trade is qualified. So this is also a long. I didn't even see that. Thanks for pointing it out. When I narrate, I'm telling you, I cannot walk and chew gum. I'm not a good multitasker. When I'm trading, I'm 1,000% right here, right now. So there's two longs here. Thanks for bringing that up. The mean reversion long, this one that I was talking about, the long, right? I think it was from here. Yeah. So it was here, well, wherever it was. Can't remember. But it was back, I think it was here to there. Support. The VHVN scale, break above the VHVN, long, going for 25, right? I think that was it. Okay. Break the IB, pull, oh, no, we didn't. Okay, we broke the, 1030, all right. Broke the IB, come back outside. Now this is mean reversion. Epoch migration, holding support. Resistance is up here. This is a target. Don't forget yesterday's high. 25 is resistance. Support, resistance, support. Now I'm showing you the IB. So here, right here, if you took the IB, and I think this is the first time we break the IB. I don't know. I got to go look. Yeah. So right here, first time we come out above the IB, remember there's over a 90% probability we take out the IB. So we take out the IB here. This is support. You get VPOC migration. This is support. And now you're looking for two possibilities. Here to there, out the top, or down here. Let's look. What do I get? Come out here, under the IB, under this distribution, high volume is here. This is like a shopping experience. Too high, too low, too high, too low, high volume, breakaway, too high. This becomes resistance up here. And don't forget this up above. And 25 is resistance. So you've got this, and then whatever. Break high. You're back over the IB. Now you're looking for a long entry. And if you took it over here, this would be okay. You're at support. But if this isn't your trade, then you would wait for it to break up again and pull back, this is your resistance. Let's just see if we get it. Right here, let's look. And open this up, see if we get our trigger. Here's your volume. Here's your break. Support is here. Pull back here. This is a low volume node. Outside edge of this distribution, and the high volume is here. So depending on your skill, let's look at this. So you come out here. So right here, it's resistance. Pull out. Looks like it's going to zero. Absorption is here. No way to know. Come up here. Bobbling. And this is your IB continuation trade. You need a way into it, though. Very hard, right? What do we do here? Break low. Pull back here. I'm now above my support. Here, from here. This is rotation. This is called mean reversion in a fractal. It is more complex. It's more advanced. And this is my resistance. Where are we? There's my resistance. Can you kind of see it? Now, it doesn't mean you should take a long here, because this might not fit for you. So you don't have a trade. But this is what we know if you're in Trader Lab. We know we have a long, and if it pulls back, we still have a long. Right here, there's your resistance. And why would I take longs? Because I have over an 80% probability of squeezing these guys, the shorts out from yesterday. Does that make sense? Is it logical? What do you guys think? Yeah, ding. The IB Barry, it stands for initial balance, or first hours, high and low, IB. There's a glossary in the Trader Lab. You guys can access that. There's no cost. There's a link in the bottom of YouTube, and you're all welcome to visit Trader Lab. You just have to confirm your email, your Discord email, so we know you're not nefarious. So the statistics tell us about the IB high and low. The statistics, over 80% tell us yesterday's high or low. Doesn't mean we're going to ever take out yesterday's high. But what did we do yesterday? Didn't we have a big sell-off? So what does that tell you? Stops. You see? In fact, this was our short, I think, yesterday. Yeah. This is where we took our short yesterday. Up against 35, all the way down. And 95 was our outside target on the downside. I think that's a pretty nice trade. What do you think? Today, shorts now, and here's a concept for you to think about, everybody. And Ding, I'll answer your question in a moment. The market, write this down. The market goes up to go down. Now remember, we had the election, we had the gap, we have breakaway gap. Everybody's long to the gills. What's under the longs? Sell stops. What did we do yesterday? Take out the sellers. I'm sorry, the buyers, the sell stops. Then what's in here? Shorts. What's on top of the shorts? Buy stops. What do we do after we go down? And then we go down this morning, which adds more sellers and more buy stops. That becomes the buyers. So short covering from this morning's sellers, yesterday's sellers, and where's the fuel? Do you want to be short or do you want to be long? Think about it. That's market mechanics. You learn that in Trader Lab. Now, what happens in here? No clue. Not my job. My job is to wait for my trades, to put them on, and to get scaled so I am risk neutral. Then I hold to targets. And that's why it's a minimum 2-lot configuration. So Ding, how do you do this? You're asking. Well, if I know this is too high, because I had my sellers, and I know that I have a structured trade here, I broke out of a microstructure, I'm above my IB, and I have 80%-ish probability, past performance, not indicative of future results. I put a limit order here. I give them 1 or 2 ticks, and I have an exit, maybe 2 ticks ahead of that for a scale. So I'm in here, 22. What is that, 8 points? And, so if you don't enter here, So you enter here. Your stop is under here. Your scale is here. Now you got yourself a 6-point scale or less. Now there's different ways to do this in Trader Lab. I share this. I'm an educator. I'm here to educate you. I'm not here to give you any nonsense. And if you're not willing to roll your sleeves up and dig into this and determine you want to become a professional and create a career, then Trader Lab's not the right place. There's loads of other places to hang out. But this is for traders who said, I've had enough. What am I doing right? What am I doing wrong? Why am I not successful? I've been doing this for X number of time. It could be months. It can be years. It can be decades. What have you invested? And is the outcome any different? Other than little runs of winners and then runs, what? Is the net result the same and you're working hard? Maybe it has nothing to do with your intention. It has to do with your process. Many of us pursue processes that are defective, and we don't know they're defective because we have intermittent success. Again, Trader Groundhog Day. So I'm just saying, if that's you, don't feel bad about it. It's all of us. Me. And I'm doing this 45 years. I did the same thing as you. The difference is when I started in 1980, there was no internet, there were no PCs, and you had to buy a book or go to a seminar and pay a horrendous amount of money, which you could throw your money away there also, which I did. And over the years, I worked beyond diligent. And because I wanted to actually get a membership down at CME. And I was actually brought into the business by one of the largest wheat traders in the world. And he brought me in the business. And I actually didn't come in the business to be a trader. I came in the business for hedging, for financial, with interest rate risk. So I was coming in from the commercial side. I wasn't, what's this trading thing? I don't know. But shall we say, it lit my fire. And I said, okay, I got to get a membership. I got to get down on the floor with these guys. So, but then, I won't go any further, but if you want to know more about me, that's really not the reason you should come to Trader Lab. It's not really important. What's important is I've probably done everything you've done and tons more because I've had more years to do it. And I've created trading systems. I shared an office with George Lane. If you know who he is, he created stochastics, an early oscillator. So I went down oscillator world. I thought the Holy Grail showed up. You probably did too, right? So we've all done this. So the question becomes, the Trader Lab community is about leveraging everybody's experience. And if you can't measure it and it's not consistent, then you're just gambling. And I always say, if you're going to gamble, go to the casinos, get the cocktails and the ticket to the buffet. Maybe they'll give you a ticket to Adele. Because that will be more rewarding. By the way, these 60 PDFs are examples of structured trades. I share them in Trader Lab. These are actual live trades and also just screenshots. And I did this like in 2020, and it was a counter trend setup and shows trade management triggers. There's just tons of these. So, and order flow, and you're all welcome to that. That you can access through the link in the bottom of YouTube. If you have other questions, please post them. Let's try something else here. I'm having a little trouble. I want to remind you there is a series of webinars starting next week on funded trader programs. Let's see if I can't find it. Very annoying. Let's see. These are where the higher time frame levels are coming from, by the way, that I'm talking about. The micro composite 25, the 94, 95 target, the 07 target where we had that, all that's on the price map. 15 half, which was where we were leaning for shorts this morning, 25, and then this 35 half, and then out the top or not. But yesterday's high is right here. So this is what we're looking for. And Funded Trader webinar series, November at 9 a.m. Central Time. You'll find this interesting, I think. You guys ought to check this out if you're interested in becoming a funded trader. And in my opinion, It isn't like when I started trading, I had to get my checkbook out. Now you can basically leverage using a funded trader program. And you'll find out all about that. And there's a lot of information out there. We have a lot of funded traders in Trader Lab who are using Trader Lab processes and plans to get funded and are pulling dollars out of these funded programs. You can learn that in Trader Lab or wherever you want. But the key is you need to understand how to trade before you even think about this. And you only need one structured trade that has a statistical edge. If you have one, you can start from there. Remember, resistance. So you can see the trade, right? And you can see why the long. It's all statistical probabilities. And depending on where we go, I'm not saying we're going to make a new all-time high. That's not in my plan. The 35, remember, this is where we were shorting yesterday. So all the buy stops are here, and there's potentially stops up at 43. It's only 10 points away. We can do it. So our last longs are either here, 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 scales are here, and then your helmet's on. Questions? Please give a thumb up if you're visiting in YouTube. The thing about a market order, that may not be the best way to enter. Because most of us, and I experience it too. I mean, we're human, we're all lunatics under the hood because of the emotional stimulus. When I say lunatics, by the way, today they're celebrating Robert Louis Stevenson, the author. He wrote Dr. Jekyll and Mr. Hyde. I refer to the emotional state as Hyde, because if you know the story of Dr. Jekyll, intentional, analytical, professional, calm. Hyde, lunatic, unbridled emotion, right? Out of control. When we have a location for a trade and we want certainty, we don't execute. Then when it's up here, we hit the market order, right? Your scale is here. That's FOMO and fear of loss, the saber-toothed tiger. That's your emotions that are controlling your trade. The business of trading is not based on how you feel or confirmation. And we all are seeking confirmation. It doesn't exist. That's part of a defective belief system. Now, this is not criticism. This is just human nature, okay? So if you want good entry, and you have no certainty whether you buy it here or buy it here, does it make sense to put a limit order here and a stop under here? Or buy it here with a stop where? There? You got more risk there than you would at structure that supports your trade. So if you want to enter better, and you will miss trades, but you'll have less risk, so you enter here, now you got a good location to scale ahead of that. What is better, Ding? Can you trade Forex and Bookmap? You should go to bookmap.com and you can kind of see all the different markets and things you can trade. I traded FX for a long time. Well, because I was a trend follower. So I would, and don't forget, when I was managing money, is you put the trade on, you go take a nap. You might have a trade on and you're just rolling it over. And when I traded options, I kind of used them in a similar fashion. A little different with options back in the day because I would buy out of money. I'd buy them. I wouldn't sell them. I was buying them using market timing in this to get extremes. So I would buy expiring options, 1 or 2 out of money, catch a swing with them. So I'd only hold them for a couple days, 2 days, 3 day swings. And I traded S&Ps that way also, the big ones, 2 to 3 day swings. Everything else was trend. So bond options were pretty good. I liked them. So because of the risk. And when you get into an expiring option, as you know, you can pretty much buy the option for the same amount as a stop. So it actually, when it came down to the expiring options, they actually had more leverage same risk or less risk, actually, because if the market went limit or something bad happened, the worst that would happen is I knew my risk. Funded trader programs kind of operate in a similar fashion. It's like an option of sorts. You pay for leverage, and the worst that happens is you have a fixed stop, but you have the upside. And don't forget, we're doing a special program on funded trading, and that's starting on Monday. And you would go to bookmap.com or go to the Bookmap Discord Trader Lab. Come there. There's a link in the bottom of YouTube, and then you'll see the event calendar, and you can register for that. But you do have to confirm your Discord email. You can do all that through the link in the bottom of YouTube, and also visit Trader Lab. Remember, Trader Lab's a community of like-minded traders. It's a serious community. And it's a lot going on in here. Here's someone who's just starting out. How does the data work in Bookmap? If I'm starting out, would you recommend that I focus on a few setups? I recommend you start with one because it creates a template, a process. This is all about process. Previous high, extended target, which we know, never boring. Oh, thank you. Thank you. And there's conversations. Well, when did the context change? Why did you do this? Where does Tom get his data? IR Investor RT. So all of this is going on, and you're all welcome to Trader Lab. Here's someone who has $92,000 profit in a trade, bought Bitcoin at $400. I asked him if he wanted to adopt me. I'm available. Probability of taking out overnight high is not too high. It's low if it shows, not recommendation. It's a potential area to observe. Another piece was we're in balance, of course, clueless. We're mean reversion in higher time frame. So that is the mean coming back here. So this conversation, if you knew the nomenclature, if you will, and the vocabulary, then that's that, you know. Narration, price narration. Anyway, all this is Trader Lab. If you're interested in this kind of community, what it's all about, it's leverage, guys. You can see me posting. I put charts up in here, and it's not just me, it's everybody. It's like I say, it's a village. If you're interested in Trader Lab, use the link in the bottom of YouTube. Also, I want to remind you guys that there is a library of webinars, and you can see them all here. Creating Your Trading Plan. It's a 3-part series I did. Also, dissecting market structure. Here's a deep dive. See the magic of auction market theory in the profile. And there's a lot more. So, and other streamers. So you guys, you know, this is all available in Trader Lab. So I invite you to visit the Trader Lab. Please give a like and a thumb up if you're visiting in YouTube. Don't forget, we're having a special Funded Trader webinar series. This is November 18th to 22nd, 9 a.m. Central Time in the Bookmap Discord community server only. You can access that if you're in YouTube. Use the link down there, give a like. Visit the Trader Lab. If you're serious about building a business and trading, if you're not getting the success you want, I think you can move your journey along by visiting the Trader Lab and becoming part of a serious community, building businesses and potentially careers in trading. Thanks again, guys. Give that thumb up, and I look forward very much to seeing you again in the Bookmap Discord Trader Lab community. Thanks for visiting Trader Lab today, and I will see you in the Trader Lab.